Hi traders, here's a new video. First of all, the risk warning: your invested capital may be at risk. Don't trade with money you cannot afford to lose. And this video is not an investment advice. So this video is another deep explanation video, and this video will be about how to trade the momentum, yes, based on the inside swings and the outside swings. This is in general more about continuation pattern and reversal. Yes, it sounds a little bit weird, yes, but it's so I will prepare to do a call now. I'm going to do a call now because I'm expecting that price will go up from this level. So it sounds a little bit weird, yes, but you don't can't expect, or you don't know how those kind of swings can be applied to reversal or reject your retracements. And I will explain this in this video, in this deep explanation video, after I have done this in the money. And you see I have done a reversal because I understood this from those kind of swings which I'm explaining now. So what we have covered till now, we have I have done a few videos about deep explanation videos about how to draw the momentum, yes, and let us cover this. All those things which I'm doing here in the deep explanation are based on those things which I have explained in the ebook. So get this ebook, study those things, watch the related videos, yes, because all I'm doing is based on this, and I would say that this ebook is the price action Bible, yes, and so try to study those things, watch the related videos, and try to understand those concepts. So the last concepts which we have covered here in this ebook, you can find the link of this ebook in the description. Yes, it contains the most important candlestick pattern, chart pattern, binary option, turbo trading concepts, market condition, trend identification, rejection, candlestick math, and a much more concepts which can be applied to any kind of time frame and any kind of financial instruments. So, and those things which I'm covering, so we have covered this kind of things: how to read the candlestick momentum, how to draw the candlestick momentum. You see I have pimped a little bit the chart, yes, and this cheat based on the inspiration of one of my Facebook group stuff. He inspired me to do this a little bit more comprimated. Yes, you see here higher high, higher lows. So that is the first part. I will recover this now easily, fast. For those one who do not have seen this, you need this kind of stuff to understand what I'm doing today or in this video, yes. And after this, watch also this video here where I have explained how to read the direction of the candlestick momentum, trading, and price. Yes, I have pimped this also a little bit after that to make it much more clearer. So also inspired by one of my Facebook group stuff. So okay. And then today we are talking about how to trade some momentum trading based on inside and outside swing trading. So, and swings are nothing else than this one here. This is a swing, this is a swing, and this is a swing. Yes, all those black lines are the swings. So first of all, I will recover those things so that those one we do some more practice. So we have here four types of candlestick, or four kinds of pattern. Yes, we have those one where we create higher highs and higher lows. We have this one where we create lower highs and lower lows. Yes, it's a downtrend, uptrend, downtrend. Then we have the inside bars, and then we have the outside bars. And here below we have how we connect those things together. Yes, and you see the inside bar will be ignored completely. Yes, and then it will decide if we get up or down. And the outside bar, we will get only the opposite of this one, and the other one will be ignored. If you do not know what I'm talking about here, watch the related videos. I have done this really good explained, I think. So watch this. So okay, that was this one. Let me do this bold too, so that it's much more clearer. As you see, if you have the outside bar in a downtrend, the lower low will be ignored. That means this one will be ignored. If you have an outside bar in an uptrend, you ignore the higher high. That means you connect the lower low. Okay, that is what's about this. So we will do this now fast on this chart here. So let me do this so you understand what are the swings and so okay. I will do this easily. Yes, we have here some kind of doji. If you look this in the here doji, this is a doji here on the higher time frame. Let me draw this. So we got here a doji. Yes, this is a doji. You see here this one, and then we got here this one. This is a doji. Opening price is the same like the closing price. So we have a doji, yes, in the higher time frame on the 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 minutes chart. You have here a doji. So, and then after this, we got here this kind of downtrend, and now we are drawing this kind of swings. So if we are doing here, for example, this is an inside bar, this will be ignored. Yes, this one will be ignored because it's an inside bar of this one. So then we are creating a lower low. So we connect this way. Then this is again an inside bar, which, or we can say it's not an inside bar, it's a higher high creating. So we connect this in this case. Then we are connecting here again, lower low, lower low, lower low. Yes, then we get here again up, yes, a higher high. Then we are getting here down again, yes, lower low, lower low, lower low. Yes, then we are getting here above, yes. Then we're going down again, lower low, yes, above again, lower low, lower low. So, and if you have something like this, yes, here we have an inside bar, this will be ignored. So, that are the swings. Yes, and obviously those one which I'm drawing here to is 2, 3, yes, you have to imagine like one swing here. It means we have here one swing down, a correction, another swing down, another correction, yes, another swing down, another correction, yes, that is what's about, yes, and that is what I'm talking about, the swings, yes, that are swings. That is the impulse swing, yes, here, this is the impulse swing. And this here one is the corrective swing. I have to draw this again a little bit in some other way. So let me draw this again. So in two colors. So we have here yes, okay. So let me draw this. So we got here this kind of swing downwards. Yes, this is impulse swing, and then we get here another one in green. I will do this in green so you understand it's so yes, and then we get another red one. Let me draw this, okay. Another red one downwards to this, yes, and then we get again a green one, yes, a green one. I don't know if this was this color, so something like this till this level, yes. And now it's going up here again, yes, and so it's not anymore a downtrend, yes. It's it could be something getting something else, but or in a higher time frame, you see here we have here also an up corrective, so it would be something like this. Let me show you this. Here, this is a complete downtrend, yes, and so you can see downtrend, correction, impulse swing, correction, and that is what's about, and then the downtrend could probably continue to going down. So that was this one, what I have already covered, yes. And to see if we are creating here, let me show you this. If we are creating here a lower high, this is a lower low, a lower high. Here we are creating a lower low, yes, this is a lower low. And here we have another lower low, yes, and a lower high here too, yes. So then we are creating here, there is a downtrend, yes. Now we are breaking this lower high, yes, by this candle nearly, yes. And that means we could get here now or uptrend, or we get here in a ranging market, yes. If price will stop here at this level, and it looks like it will stop here on this level, yes, on this previous lower, we have here ranging market, and that is already a sign, yes, that price will get here in ranging, yes, and that the downtrend could be over, yes. It's only probably because there are a lot of different shapes, yes, which are forming, and that is what we are going to talk about in this video. So okay, that was this one. I have explained those things which I have already covered. That was this one here, A, B, C, D. Inside bar, outside bar will be ignored, blah blah blah, yes, all those kind of stuff. Then we get here the direction of the candlestick momentum trading and the price. You see impulse wave, yes, impulse wave here, corrective wave here. Yes, and if the impulse wave is larger than the corrective wave, yes, in an uptrend, if the uptrend is larger than the corrective downtrend, yes, in a downtrend, then we have an uptrend, yes, uptrend here, uptrend, yes, and we are creating, and important is we are creating higher highs and higher lows. So if we are not creating any kind of higher highs and higher lows, we have a ranging market. In this kind of market, we do not have not even impulse wave or a corrective wave. We have no of them, yes, because they are equal, and so and that cannot be. Yes, an impulse wave is almost this wave which gives the market the direction, the trend the direction, and in this kind of market there is no direction, so there is no impulse wave and no corrective wave. And no swing, corrective swing, you call it how you want. Yes, we are talking now about swings. So, and then we in a downtrend, we are creating lower highs and lower lows, yes, and that is, this is an impulse, this is a corrective, this is an impulse, and you see almost the impulse is almost greater, larger, yes, in the downward move, the larger downward move, and the corrective is smaller one, it's going up. So that is the simple stuff behind this, and now we are going to cover some continuation and reversal swing patterns. Yes, those patterns are those ones which will occur on the, if you are trading 1 minute chart, they are occurring on the 5-second chart. Yes, you can watch them and you can understand on those kind of swings in the 5-second chart how those things behave. Yes, because all you do look on the larger time frames. If you have more time, you can watch them there. But I can only recommend to use the 5-second chart to study those swings and to understand the movement of them. So there are 6 different patterns. Yes, which there will be obviously much more, but that are the ground foundation, the foundation of all patterns. Yes, but there are obviously more of them. Yes, because market can behave in every kind of behavior. So we have the sales. What do we have? We have here. Okay, I will do this in this manner that we will put here. Here we will have the continuation swings. Yes, those ones which are continuation. The continuation swings. Yes, continuation swings. Yes, how they look like, and I will explain this also. So the continuation swings, I try to do it as easy as possible. Yes, the topic is not so easy like it look like. I'm doing really, I'm thinking a lot about how to explain those things really easy to you. Yes, because it's not so easy like it should. Yes, because you watch only those videos and think, okay, that are 20 minutes and this thing is done or something like this. Yes, reversal swings. Yes, reversal swings, and then we have the ranging swings. Yes, where market is ranging. So, and the ranging swings. Yes, so let me see. Okay, so and then you will understand also what and I will have to do another topic where I'm gonna talk only about the inside swings and the outside swings. Yes, which are in particularly the inside are the continuation swings. Yes, inside swings and the outside swings. And so let's see if I can show you this continuation and that the ranging. So ranging, and I will put this here together, and I will put this here together. Continuation swings, yes, yes, or inside swings, yes. So, and then you will understand this, and then we have here also. Okay, that will be removed. I will put this a little bit higher. So. Okay, so and then we have here the reversal one, which are the outside swings. outside. And I will show them clearer and more in detail when I'm covering those things. First of all, we need to understand only how they look like and where they appear. Yes, and then I will cover those things in a particular time. So, okay. So we have here two continuation pattern. We will do here an uptrend. Yes, we have here an uptrend that's looking like this. Yes, I have explained this in the Elliott wave theory stuff. Yes, where I have explained this. We are creating here, we start here at this point. We are creating here a higher high. Here we are creating a higher low. Yes, that is a higher low. And after this, we get again a higher high. That is what an uptrend is about, yes. And then the particularity is that in the second corrective wave, that is here the first corrective wave, yes. In the second corrective wave, there will, and that is what I have explained almost in the Elliott wave video. We have here this kind of zigzag in this kind of corrective wave. Yes, which is moving like this. Yes, it's moving like this. And this is what I'm calling the inside bars. Yes, the inside bar. This is a complete corrective wave swing. Yes, and then price will go up further. Yes, and now we are doing this also in colors. So I will show you this. That is how you distinguish a reversal from a continuation. That you should imagine this can be on the lower time frame. It can be if you're doing 1 minute trading. This can be on the 5-second chart. Yes. So let me change first of all the lines here, so it will be more clearer that this is a corrective wave here. So and that is the second corrective wave. So and then it would go up. Probably up here. That is what this is about, because after this we get another impulse wave. Yes, if it will break through this area here. So okay, I will do here some color changing so it's much more clearer. So we have here a green candle. The corrective is a smaller red down movement. Yes. Then we got another impulse wave. Yes, the second wave. I have explained this in the ebook where I have explained the Elliott wave. I will show you this after this. And then we have here another one, and this, okay, this should be green here. And if you connect all those four, 1, 2, 3, 4, I would do this 3 together, you would get here nothing else than one downward movement. Yes, something like this here. Yes. That is the second corrective wave which is moving, but it's split it in a zigzag. Yes, that is what's about. Yes, you have to understand that the second corrective move is not a line. It's not directly. It will do this kind of behavior. Yes, I will do this so you understand this. That we have here a zigzag in between, and as soon the price, and that is what's important. Yes. As soon that price, I will copy this one, will break. What the heck? As soon the price will break this area here, yes, we have a continuation trade. That is what's about. That is when, and I will show you this also, how this looks like on the inside bar. If you expect that, if you understand that this will be, for example, a bullish candle with a wick, yes, you get another movement, yes, and if this high of the, or this will be here, for example, this will be a bullish candle, and this price gonna break again through this level, you have a continuation. Yes, that is, but it has not to go up above this. Yes, it can be also lower. Yes, but this is how the continuation pattern looks like. So, and the same is valid for the downtrend. Yes, that is the inside swing, and those kind of, look at this, those kind of things which I'm showing here, that are inside this major swing, this impulse swing. So let me show you this here. So this one, this three here, yes, are inside of this impulse swing. You see how they are inside. That is what the inside bar is, yes. That are the inside. These swings are inside, and you don't know what is going on, if there will be a reversal or not, as to this level when price is going to break through this area here, this area, then you know it's a continuation pattern, yes. But there are also a lot of other things, yes. So we have here the uptrend. It's really simplified, yes. There are a lot of other things. So and then we have here the downtrend, the same thing. I would like to do this a little bit other. I will do this in this manner that I'm gonna copy this completely, else it will take too long. And it's and all in all it's the same like this, only vice versa. Yes, and you will understand immediately. Yes, so I will copy this. So I will put this here on the same high, and then I will remove this case, something like this. Let me show you. If we have the same high, okay, it's okay. So I will let it in this case. So and that is the same thing. You see the inside. I have to change the colors. And you see here the same behavior. Those movements here, yes, are the inside. They are inside of this kind of impulse swing, yes, and that is what this about. And after it breaks through the lower low, here higher high, here lower low, you know there is a continuation. Yes, it will be a continuation trade. Yes. If you are doing this on the 5-second chart, 10-second chart, or something like this for the 1-minute chart, expiration time. If you're having longer expiration time, you can draw those things for the bigger one, yes. And so it's okay. So and now we are going to discuss those things which are which are those reversal things, yes, and that are those one. Let me see if I can show you this. I do those things out of my mind, and so I have to think about it a little bit, because before I gonna draw here some things which are wrong. So okay, let me imagine here we have a reversal. A reversal is looking like this. We get here this kind of movement. We have here again an uptrend, yes. That means we are creating higher lows. Yes, we are creating higher lows and higher highs. That is the uptrend. Yes, you see here, this is going up again here. This is what the uptrend is about. So, and then the behavior will be this one here. Let me show you this. We got here a movement down. Yes, smaller one. This is because it's a second corrective. Yes, that is almost smaller. So and then this will be a zigzag. Yes, I have explained this in the video about the Elliott wave. Yes, that is the theory behind the Elliott wave stuff. Yes, which is much more complicated, but I think it's time now to discuss those things. So and then this is going down here. Yes, and then we get here another one. Another one, I will remove them later. So we get here this up, and then I will copy those things. Yes. So let me draw this. Okay. So and then it's happening this, what makes it a reversal. Okay, wait, I have to close the door in 1 second. So okay, I have here this one. So and then we get this, what a reversal will initiate, yes, and that is this one here, yes, that price will break through this kind of higher low, yes, and that is what a reversal looks like based on those kind of swings. Yes, you see here the corrective wave will move in this kind of manner. yes, and that is what the outside swing is, yes, because we are getting below, yes, in the opposite direction of this direction of the trend, yes, and that is what will cause a reversal, yes. That will be a reversal because the trend is over. I will make it a little bit longer. So, and then I will also change the colors. So let me put this here. So, and then I will copy this. So I will copy this immediately. So we have it already ready. So, and then, so let me see. So, and yes, we will move this this way. Okay, so we have this also for the downtrend. So, and you see it's so. Okay, so we will cover now the thing that is the outside swings, yes, which are going outside of the so we will here discover outside of this, and that is what it's the outside bar also, yes, if we have a break of those levels here. So let me do this here in this case. So yes. Yes, so we see we are breaking through this area, yes, on the other side, and that is what the outside swing is, yes. These swings here are inside this impulse swing, yes, but they are moving in the opposite direction, yes, and here we have the same, yes, it's breaking through, and that is how it will happen in a ranging, yes, we have a downtrend. So, and obviously it can go also down further, yes, you know, if we break through this area, yes, here, if we break through this area, we have almost a reversal happening, but it can be also a ranging market then, yes, it is also important to understand this. Yes, it doesn't mean that if we are breaking through the upper part, it will be now a reversal. Yes, so that price can happen. That can happen every time, everything. So okay, that is this one. That are the outside bars because it's taking really long now. And you see if and the impulse wave. Yes, let me copy. We get here if we connect this the corrective wave here in this case, which will not be anymore a corrective wave. Yes, because in this kind of case there is no corrective wave anymore. Yes, because we are breaking through the area of the impulse wave. Yes, and that is a sign. The impulse wave is this almost the larger one, and in this case there is no anymore, and that's the reason that this one will be not anymore. This one will be not anymore the impulse wave, yes, because it's not more anymore the larger one, and this one here is breaking through this area here, yes, the the higher low, yes, the higher low, and here the lower high. Yes, that is that's behind this all this stuff. So okay, and then we get the last one. Those one which can happen here almost always depends on how the price. If this price, for example, breaks through this area here. So wait, maybe I have to show you this also here. If price would break through this area here, yes, we would have outside bar, yes, and if price would break through this kind of area here, let me show you first here. So here we have this one. If it would break here, we would have the outside bar and a reversal happening maybe, or a ranging, yes. And the same is valid here. If we are going to break through this one here, right here above this one, yes, if we are going to break above this one here, we would have a continuation, yes, and the same is valid here below on this one here. if we are going to break through this one, yes, after the corrective wave, yes, we would have a downtrend. So that is this one. So, and the last one is that one what happens in the ranging market, and there could be also two. We have no trend, yes, it's coming up, and so we have also no impulse swing and no corrective swing. Yes, it's almost the same, then closely to the same level. Yes, and then we get up, down, yes, and up, down, yes, something like this. Yes, and then we get here those kind of movements here, which is happening in this case. So let me draw this, something like this. And then on the next video, I will show you then exactly how those things looks on the live chart, and I will explain those things more in detail. So let me draw this here. This up, down, that is the typical movement which you know from the swings. It's up, down, because price doesn't move to it. Price will not move to any level directly. It will move almost in this kind of zigzag. Yes. So, and here again a corrective zigzag. Yes, and then another one which goes down to this, and at this level, yes, at this level, you see we are again on this level, on the same level like before. So let me put this together here. So, and I will move this together. So, and then I will copy this. And you see, almost the second corrective wave will behave in this kind of manner. Yes, that is what's important to know, that almost in the same manner that the second corrective wave moves in a zigzag. Yes, and then it could be, so that's and you see that is what the ranging market is about. I could have done this a little bit greater to do this in the same. So I will do this so. That's looking better. So, and also this one here. Okay, so yes, and that was already. So let me color those things here, do the dash here of this one, and that would be the theory behind this outside swings, inside swings, and the ranging stuff. Yes, because that is this kind of things which you need to understand if there will be a reversal or a retracement, or if the price will continue to go, or if the price will be ranging. Yes, that is the logic behind this, because of those zigzags. This is what the Elliott wave theory is about. So, and obviously this kind of movement here, the second corrective wave, which is in a ranging market, no corrective, because we have no up, no impulse and corrective. But I have to draw this to make you clear that on the second swing, yes, that is also important to understand if we are talking about Fibonacci. I will do another video about this, about the Fibonacci, to explain where you apply and where you don't have to apply the Fibonacci tool. Yes, if you apply the Fibonacci tool in between of this inside swings, yes, or inside of this, or at this outside swings, you get the wrong results. Yes, you have to apply the Fibonacci tool or on the impulse wave or on this one here on the corrective wave, but not in between, as long as you don't know where it will finish. If you know that it will finish here and it starts to reverse after this one here, you have this level. So, so you see how important it is. You have this level, and this level can be again used, yes, for the Fibonacci level. Yes, that is it. But if you use it without knowing, yes, without knowing where this point is, this reversal point is in between of this, the Fibonacci tool will provide you with the wrong information and you will get the wrong Fibonacci level. That is what important is to know there. So okay, let me draw this here also and color this, and then I would say I have done this video. So I had to do this. Yes, this is down. So let me color this, and then we have here the green one, and then we can do another green one, which is nothing else than this impulse, this wave, this swing. Yes, this swing here is nothing else than the green one, only split it in a zigzag. Yes, so that's it. So that was it. Ranging. Yes, the swings in the ranging, the corrective waves in the ranging, those one reversal swings, outside swings when they are going to break. So let me copy this. Let me copy those one here. So here it's important if price is going to break the higher high, yes, then we have a continuation. Yes, if it's breaking the lower low, we have here a continuation in a downtrend. Yes, and those things are important to know. Yes, because I get so often the question how I do know if price will break through, will reverse or will continue, fake breakouts and all those kind of stuff. All those stuff are based on those things here. Here, if it's going to break through the higher low, higher low, yes, then we have a reversal or a ranging, yes, it can be also range then after this, yes, and if it's gonna break through the lower high, yes, lower high, then we have here also, and here we do not break lower high, and here we do not break anything, yes, here we do not break anything because here we have a ranging market, and the behavior of the zigzags are here ranging. Yes, that means we can expect here, or it will break through this. Yes, then we have here coming up an uptrend, or it will break it reversed here and it stay in this kind of ranging. And it can almost look like this, yes, because price do not move in a line. It's almost zigzag. Yes, that is what I try to explain in this kind of drawings here. So okay, I think that was it. If you like this video, do a like. If you didn't subscribe, subscribe to my channel. And if you have something to say, drop me a line in the comment section. So I would say stay safe and bye bye.